Ladies and gentlemen, good day and welcome to Q4 FY22 earnings conference call of Bandhan Bank Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Hiren Shashikant Shah. Thank you, and over to you, sir.
Thank you, Margaret. Good evening, everyone, and thanks for joining this call. It's our pleasure to welcome you all to discuss Bandhan Bank's business and financial performance for the quarter ending March 2022. We will take this opportunity to update you on the recent developments in the industry and Bandhan Bank during this quarter. To discuss all this in detail, I've got with me our founder, managing director and CEO, Mr. Chandra Shekhar Ghosh, our Chief Financial Officer, Mr. Sunil Samdani, Head Assets, Mr. Kamal Batra, Housing Finance Head, Mr. Suresh Iyer, and myself, Hiren Shah, Head of Investor Relations. Now I would like to request our founder, MD and CEO, Mr. Chandra Shekhar Ghosh, to brief you all about bank's operational and financial performance along with developments for the quarter ending March 22. Over to you, sir.
Good evening to all of my friends. Thank you for your time to join the call. I already said in earlier, the fear of pandemic is over. The third wave has been much milder, that it has not infused to any of the confidence. Our result of quarter 4, financial year 2022, also clearly reflects all of this trend. Quarter 4 of any is the most active period for the banking industry, and financial year 21-22 was no different from that. I have been meeting my customers at the ground level, and the signs of revival are for all to see. Credit demand is back. Many of our customers who had postponed their loans have taken fresh credit from us in the quarter. Let me start with a broad overview of the year. We reached the milestone of around 1 lakh crore advances in the quarter gone by. Advances stood at 99,338 crores, which is year-on-year basis up the growth 14%. Deposit growth has come 24%, which is the amount was 96,331 crore. CASA retained is a 42% and retail deposit 77%. Net interest income has been grown 42.6% from the preceding quarter, 3,500. Operating profit grown 53.5% from the preceding quarter, which is the highest growth in the bank life. The bank reported net profit for this quarter is 1,902 crores. NIM has increased 190 basis point higher from the preceding quarter. The last financial year, the bank provided its resilience yet again. We are now well on the revival path, and the operating environment as well as ongoing reality is in favor of a strong resurgence of business in future. Now let me dive deeper into the few key aspects of this, the success of this, the parameters. The first point is a collection efficiency. To take a collection efficiency has come in the quarter which is called the March 22 has come 99%. Collection efficiency in the month of March in EEB has come 99%, which is increased from the 97% of the last quarter, excluding NPA and arrears. This means the collection efficiency has come is a normal. Collection efficiency in West Bengal also in 99%, and Assam 1% lower, which is 98%, and total India is the 99%. Say that another part, 89% of my NPA customers are paying in the March 2022. 59% of restructured customers are paying in March 22. The improvement in collection efficiency is a thanks to our customer going back to their livelihood in full swing and the commitment that the customers have towards the bank. The improvement in collection efficiency has resulted in lowering our NPA. The bank gross NPA stands now 6.46%, which shows that the 4.35% lower than the last quarter. Net NPA has been reached 1.66%. DPD across the all of microcredit because of the large portfolio, which has come nearly half from the last quarter. EEB, the emerging entrepreneur business, has a three vertical. One is a group-based lending, which is we call the microcredit. Another vertical called that the small business and agri loan, which are we called individual, which is graduated from microcredit to individual. And another vertical we say that the micro home loan, which are also individual loan, and another one have which is the two-wheeler loan. The EEB saw a robust growth in this quarter as expected, because the portfolio has come growth in the last quarter of every year. In financial year 22, they are added 22.88 lakhs new customers in financial year 22. Disbursement in the Q4, where it is they are raised on that the 22,968 crores, which is a 15% higher than the pre-pandemic year's last quarter, which is 2020. So that means this shows that the business has come to this normalcy. The bank, as a policy and a strategic policy, the migrated or graduated the group loan to the individual. As on March 2022, bank migrated 24.32% of the group loan to the individual loan. Sorry. Come to this, the growth vertical, which is the housing loan. We are 2.5 years ago, we have been merged this vertical from the Gruho. And last quarter, it has come very good growth, but this year they are given this very tremendous growth. Portfolio grown 11% year on year. Portfolio stands now 23,726 crore. CAGR in the last 2 years has been healthy 9.29%, despite the challenges period we are passing. In financial year 2022, the total disbursement have done this vertical 4,340 crores. growth of 105% over the previous year and 95% from the last quarter. In quarter 4, 86% are housing and 13% are LAP. And this is the housing loan portfolio, 61% salary based, 39% is self-employed. Portfolio quality continue in the same good. Next point is there that this loan have been ticket size also increased from the previous year, nearly 1,10,000 rupees average ticket size. Coming to our next two vertical, another vertical is in commercial banking. So commercial banking have been grown 60.8% year on year, and quarter on quarter have been grown 40%, which is the portfolio 11,720 crores. The retail credit other than housing loan, our gold loan, personal loan, two-wheeler and auto loan, together this is in stands this portfolio 1,645 crores, which is the growth has come yearly 39%. These are the total performances come from the business point of view. I am coming now the strategy of the bank. We are decided that the 2020 will be we have been prepared a 5 years plan, which was the 21 to 25. And during this period, 2 years, we have been seen that there is a pandemic situation has come, business growth is not coming as a normal. For that reason, the last February, we are again revised our plan, and we find out on that we can reach that plan with another 1 year needed. Instead of 2025, it will be reached 2026. Major other couple of points strategically we have been decided, which on the track we like to mention. The bank have the strategic first point how we can be like to strategically diversify the microfinance loan with the other portfolio. So group loan, which one is the last year is a 60% has come down 47% in this year. Housing loan has increased from 23-24, and commercial banking has increased from 16% to 28%, including individual loan, which is graduated from group loan. And retail loan, 1.3% of the total portfolio to 1.6% the portfolio. So we like to continue in this way to graduate and also expand with the other business. And accordingly, by 2025, we can be reached to microcredit portfolio, which is called the group loan, 26% from today 47%. We are diversifying geographically. Bank has hit on that geographically expand the branches across the country other than East. This year, we are also decided 530 branch will open, which is the 80% above will be other than East. That also helped us to diversify the book. You know that a housing loan vertical, we are already working on that the West and South. They are also expanding more of those branches in a South and North, which also helped us to geographically diversification of the portfolio. Third point, bank are focusing on the retail business more, not as a corporate business. So retail business more or less other than housing, because of microcredit is the unsecured loan is more. So bank has decided on that how we can be like to strategically balance the secured and unsecured loan. So as of today is in secured loan is in 39%. So bank as by 25 it can be 46% of the secured loan and 54% is in unsecured loan. And 26 we can be like to reach on that 50-50 secured unsecured loan. Bank have been open in this year 329 new branches, means in the last year. Next point on that, bank are as per earlier I mentioned also, we are investing for the transformation of IT system, including CBS, and also we are developing in the digital banking. Focusing on that, how we can provide the digital in the rural and semi-urban people with all respect of liabilities and assets. So that we are primarily we are working on that. All of our loan, including microcredit, will process, sanction, disburse system digitally. And whoever the customer is possible, they are like to repay the installment by digital, they will be like to give also digital. And finally, graduation from the microcredit group to the individual, that is also separately we are like to develop time to time. So this is an overall, all this the performance has come because our bank team are working very good and they are very much committed. Customer intention to return back the money is very good. All together, I hope that they're coming to normal and next couple of years business will be also come to normal. Thank you to all of you. I pass on this the next clarification to our CFO Sunil Samdani. Then we'll be like to go to question answer. Thank you, Sunil.
Thank you, sir. Good evening, everyone. I just want to take 5 minutes of yours to run through a couple of slides, which I think is important. First, starting with the DPD status of our EEB, which we've been tracking and monitoring ever since the pandemic hit us. We are glad to say that we have come close, very close to the pre-pandemic levels in terms of delinquent goals. Our 1 to 30-day DPD, which used to be 5.3, which was 5.3% in December 21, has come down to 3% in March of 2022. 31 to 60-day DPD from 2% to 1.6%. 61 to 90-day DPD from 2.9 to 1.9%. And NPA from 13.7% to 7.8% in the EEB vertical. What is important here is when we saw the turnaround in the third quarter, we saw the early delinquency bucket showed the bigger improvement. And in the fourth quarter, we are seeing that improvement across all buckets, whether it's 0 to 30 days, 31 to 60, 61 to 90, or an NPA bucket. So that's heartening and that gives us the confidence the future is good for us. The other slide that I want to run through is the slide number 8 of our presentation, which talks about the stress pool and the coverage that we have against the stress pool. In December 21, we had 170 billion of stress pool, and we had estimated that we could recover in the quarters about 50 billion in addition to the provisions and the CGFMU recovery. We are glad to inform you that we have reached this 50 billion recovery instead of 2 quarters in 1 quarter itself. So that again is a good sign and it gives confidence that our customer businesses are back to normal. And the coverage that we estimate as on March 22, that stress pool which was 170 billion has come down to 119 billion. And against that, we used to have a 54% coverage by way of provision. It has gone up to 58.5% as of March 2022. The estimated recovery, though we've done phenomenally in the Q4, conservatively we are budgeting for 30 billion for the next 2 quarters. The CGFMU recovery remains constant, and as always, we don't want to put a guess on what will be the quantum of Assam Relief Fund. But what is important here is, despite not considering Assam, we feel that we have enough coverage to cover our entire stress pool. So these are the 2 important points that I wanted to mention here. Happy to take questions. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Kunal Shah from ICICI Securities. Please go ahead.
Yeah, congratulations for a good set of numbers. So firstly, you had highlighted that with respect to this credit guarantee, we'll start applying from 1st of April. So if you can just let us know in terms of what is the status and this entire CGFMU recovery of 2,500 crores, or when do we expect it to come through? Yeah.
To come in this financial year, because we interacted and engaged with the CGFMU. So the process that they have is the institutions can claim only once a year. So with that being the case, this should come in 2 installments. First, the 50% of this, close to 50%, around 1,200 odd crores in this financial year, and the balance in the next financial year.
But we have not started. So in terms of like we will do it towards the end of the fiscal, or when should we expect this 1,200 odd crores to come in this particular year? Sorry, I missed the earlier part. Yeah.
So this year, as I said, we can do it once a year. So we should do it by the end of this quarter, and we should expect in the first half this entire money to come in, the 50% piece of it.
Okay. Okay. Sure. And secondly, when we look at it, overall, the growth was primarily coming in from the bulk deposits. Retail was more or less flat, and was flat, and also not that much of a growth relative to the loan book growth. So how should we look at the overall deposit mobilization given the rising interest rate scenario, and what would be our stance in terms of increasing the rates over a period? Yeah.
So clearly, we are not worried about the deposits. The growth that you see in the bulk deposits is largely to do with the seasonality. You will always see Q4, the bulk ratio at the highest level, because our advances grow at a much faster pace than a pace at which a retail deposit can grow. And that is one of the reasons. The other reason is if you see our rates today, we are as competitive as any other bank on the deposit rate side. And typically, the first quarter is relatively muted vis-a-vis the Q4 of the previous year. So we are confident on our deposits. Interest rates clearly should not, it's a market-driven factor. We have, if deposit cost goes up, the lending rates also goes up. In fact, on the fixed rate loan, which is largely microfinance for us, we have already taken an increase of almost 150 basis points last September. So the full benefit of that should accrue in this financial year. And the rest portfolio is anyway linked to the variable rate loan. So we don't see a challenge there. One, on the deposit mobilization side, and 2, are pricing our deposits competitively in line with the market.
Sure. And now with many of the MFIs, they are raising rates given that margin cap is not there. So does that also provide us with more flexibility? Any which ways we were much lower than that, but still, would that provide the flexibility, and would we also have a chance to increase it, or it will be based on our pricing, our deposits? How would we take that stance? Yeah?
So clearly, it will depend on our deposits, our funds, and our credit costs. So with credit cost stabilizing, the factor here is only the cost of deposits today. So depending upon how that moves, we will take that decision.
Sure. Thanks. Thanks a lot, and all the best. Yeah.
Thank you.
Thank you. The next question is from the line of Saurabh Kumar from JP Morgan. Please go ahead.
Hi, Sunil. So on your point of 5,000 crores of recoveries for the quarter, if we see the stress book is down by about 5,100 crores from 170 to 190, and there's a write-off of 20. So shouldn't the recovery be 30 billion rupees for the quarter?
Comparing like to like, right? When we are comparing 170 as of December, there as well we had a 12 billion write-off. And post that it was 170. We are comparing like to like. And in any which ways, if there is a write-off, it has a corresponding effect on my provisioning. The provisioning balance also comes down. My PCR. If you look at holistically whether the provisioning coverage, the PCR ratio, the credit cost, and the coverage, on the whole, it is a positive move.
No, it is a positive. I'm just trying to understand the collection from this EEB stress pool would have been 30 instead of 50.
Yes. Yes.
Okay. Understood. Okay. The second is, sir, on this provisioning, you could have chosen to make some more standard asset provision, during the quarter. So what is your view on the buffer provision which you want to keep?
So if you see, during the quarter, we have taken additional set provisioning. Because if you look at our NPAs, they have come down substantially. So if we have not taken the additional standard asset provisioning, there would have been a negative credit cost in the quarter. So we have buffered our balance sheet. Our ratios across have improved, whether we call it PCR or we call it coverage against the stress pool, whichever way we look at it. So that is absolutely what we look at, and we have taken the adequate provision.
Okay. And lastly, from a next year perspective, your historical normalized number used to be 1.7, 1.8. So how should we think about? Would you now buffer up that number going ahead, or how should we think about your normalized provisions around?
So we had given that guidance even in the earlier quarters that on a steady state basis, we look at 200 to 225 basis points, so about 2 to 2.25%. Typically what we say is 2% plus or minus 25 basis point as the regular credit cost going forward. And having said that, we would continue to add buffers depending upon so that can add to that. So on the whole, with buffer, it could be slightly higher.
Got it. And just one last question, sir. What is the PSLC income for the full year?
For the full year, PSLC was 658 crores.
Got it. Thank you.
Thank you.
Thank you. The next question is from the line of Rahul Jain from Goldman Sachs. Please go ahead.
Yeah, hi. Hi, Sunil. Hi, sir. Just a couple of questions. First on these slippages during the quarter. So the math suggests that it was about 1,900 odd crores. Is that a correct number?
No. If you look at bank as a whole, the gross slippages number 1,365 crores, of which the EEB gross slippages is 1,181 crores. The gross recovery and upgrades is 2,395 crores, and in the EEB the recovery and upgrades is 2,204 crores.
And Sunil, just on the slippages bit, generally through the year, the individual book, where you sort of sort of increasing the focus, how the asset quality trends are playing out there. Can you give us some sense?
So individual book clearly is much better than the group loans. So there the asset quality is much lower than the guided credit cost that we are doing. It is much, in fact, half of it. There we don't see an NPA beyond 1.5%.
You mean NPA or the loan losses?
The NPAs.
Okay.
Rahul, quality of the individual loan because of the very graduate customer from the group, and they are very, very good, better than the group.
Understood, sir. And sir, if you look at the total EEB portfolio, what percentage over time can potentially move to individual? And when you look at the basis the new RBI norms on MFI, what percentage of the book will be comfortable with 1 lakh rupees of ticket size, assuming 50% of the loan to income ratio?
You know that the process-wise we are started 2 years before, graduate from the group to individual because their family income has been increased. And we assess the family income 2 years before we checked the status from the credit bureau, not only microfinance, non-microfinance, which is now RBI has come for micro introduce it. So practice point of view, we are on the very speed way we are making on that, and it is needed on that. Because if I go to the lending to these people, I should be also see that not only women and also the husband check will be needed. So that is a good way to grow the last mile connectivity by the industry. And Bandhan is also the part of that to grow it. Second point on that, because of income level now RBI have been suggested, but 2 years before we are talked to all of you on that. How long I can be say that this customer will be the microcredit customer? Is it 20 years, 10 years? If they have not income increase, so I cannot, then I have been not contribute anything their life. So if their income increase, why not they will be graduate to the MSME? They will graduate to the agri-business. They will come back on that. For that reason, we are started it now. If you see that 24% of our group loan are converted in a individual loan, which is last 2 years, but majorly last 2 quarters. So I hope that it will be like to make it gradually in this way. 50% we can be like to make another 2 years.
Got it. That's helpful, sir. Sunil, 1 or 2 last questions. The previous question from Saurabh on the standard asset provision, you said you have taken it in this quarter. Can you quantify what that number is, and next year, fiscal 23, do you plan to build anything over and above this 200 basis point of guided credit cost that you have given?
I'll give you the exact number just during the call.
Sure. And then just one last bit, in terms of diversification.
It's about 225 crores. Sorry, I just got that number. It's about 225 crores.
Okay, that's the standard asset provision that you have taken in this.
Additional, over and above required.
Okay. And just last bit on diversification point, which Sir talked about. Of the MFI book, individual plus non-individual, can we get the latest figures of East and the bifurcation between East, West, South, etc.?
So this you want to know for EEB or the bank as a whole?
EEB.
So West Bengal, if I have to give you the top 3 states, right, my total EEB book is 62,400 crores. West Bengal is 25,315. Assam is 5812. Bihar is third at 6957. And UP is fourth at 5320.
All right. Thank you so much, and wish you all a good luck.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question at this time. The next question is from the line of Karthik Chellappa from Buena Vista Fund Management. Please go ahead.
Yeah, thank you very much for the opportunity, sir, and congrats on the great quarter. I just want to confirm some numbers that you gave. So you said 13.6 or 1,365 crore is the gross slippages and upgrades is 2,395 crore, right?
Yes, and this does not include write-off. These are upgrades and recoveries.
So the net reduction is possibly about 1,000 odd crore, and the technical write-off separately is about another 2,000 crore, right?
Yes, and that's how yes, that's right.
Okay, and on the EEV book of 66,000 crore, how much is West Bengal?
So we just discussed that number. So the total EEB book post write-off is 62,400, of which West Bengal is 25,315.
35,315. Okay, great. Just 2 questions from my side. The first one is for FY23, what is the kind of loan growth that you are expecting for the bank? And specifically, if you could talk about the group loan and the housing loan, what is the kind of loan growth you are expecting for the bank as well as these 2 segments?
So we are looking at 20 to 25% at a bank level, and housing is also expected to grow. In fact, our internal target is to grow faster and than the overall bank average.
And the group micro?
So that put together will be growing in line with the pan bank average.
Okay, got it. And my last question is, can I get the restructured book for the housing segment, and what was the yield for the housing segment this quarter, excluding the IBPC book?
On the yield side, just a minute. It's about almost 10%, 9.99, 10%, the yield on housing.
Okay, and this excludes the IBPC, this one, right? Because that is much lower yield.
Yes.
Okay, and the restructured book for housing?
So excluding the book which has come out of restructuring, it now stands at 528 crores. So there is about 475 crores where the restructuring, in fact, if we talk today, everything is out of moratorium, but as of 31st March, 528 was still in moratorium, while 475 came out 6 months back. So as of today, everything is out from moratorium or restructuring.
By that we mean it's still part of the restructured book, but they have to start paying. The payment moratorium has expired, but it's still like restructured, right?
Yeah, because that's the regulatory requirement that once you do a restructured loan, till the time the loan remains in your book, has to be classified as restructured standard. or otherwise as if the classification changes.
Excellent. Just one clarification, Sunil, to a comment that you made earlier. So on the micro book, you said you have taken about 150 basis points of hike, and the housing book is anyway on floating rate. So your underlying observation is that even if rates were to rise on the funding side, you should be able to hold on to your NIMs, all other things being equal, right?
No. Microfinance is a fixed rate.
Yes, so we should be able to maintain our NIMs, but that depends on which NIMs are you looking at, right? Because Q4, because of the big recovery that we see on the NPA pool, it is higher. But yes, if you look at the full year, we should be better than that.
Okay, got it. And as far as this inflation impact on your micro borrowers is concerned, especially in the non-agri segment, is there anything that you wish to highlight, at least from their cash flow serviceability point of view?
I don't think inflation we've seen an impact of inflation so far on our customers. Historically also, we've never seen inflation as the major issue as far as microfinance customer goes. And so far, we've not seen any impact.
Okay, great. Thank you very much, and wish you and the team all the very best for the rest of the quarters. Thank you.
Thank you.
Thank you. The next question is from the line of Roshan Chutke from ICICI Prudential Mutual Fund. Please go ahead.
Yeah, thanks for taking my question. Firstly, this EEB book, right, of 62,400 crores. Now, what is the tenor of this book? What proportion of the loans are 1 year and what proportion of the loans are 2-year maturing loans?
60% loan are 2 years, 40% loan are 1 year.
Okay. And can you give the breakup of how many of them are first cycle, second cycle, so on and so forth?
We don't have it handy because we've, for last many quarters, we've not been discussing the cycles. So we'll check that and we'll share it with you.
Yeah, thanks so much. That's all from my side.
Thank you.
Thank you. The next question is from the line of Adarsh Parasampuria from CLSA. Please go ahead.
Hey, yeah. Sunil, just wanted to check. Could you just give the breakdown of the other income, all income excluding the NII? You did mention the PSLC income, but if you could just break out the 2,800 crores.
So very difficult to give a line by, but I can give you the top 3 contributors, which will anyway be 80-90% of the total fee income. So the highest, of course, is the processing fee that is linked to the disbursement. So that for the full year was 848 odd crores. And the third-party income, the third-party distribution income is the third largest, which is at 347 crores.
Got it. And just the PC.
Of course. The next piece is the bad debts recovery. This quarter has been a good quarter for us. So recovery from bad debts is 388 crores.
This for the year?
This is for the year.
Got it. This is useful. And the PSLC income of 660 crore was made on what kind of sell downs of certificate? Like what's the underlying quantum?
So we didn't sell anything under the micro portfolio because of the Udyam Aadhar. So these were largely other PSLs and agri.
And would you now do a little bit more of PSLC sell down? You would have excess, right?
Oh, that clearly depends on what is my excess and how we tend to use it. Because the option to us is IBPC or PSLC, depending upon where we get the better yields.
Got it. No, I was just asking this because there will be demand in 1 or 2 years from a large bank merger. So just wanted to check if that you do have more scope in the P&L to do that. And my second question is Could you just give the slippages and recovery upgrade numbers for the full year?
Just a second. So for the full year, if you look at bank as a whole, or should I talk about EEB?
You could give both, Sunil, if that's okay.
So for the bank as a whole, the gross slippages was 9,430 crores. I'm talking about bank as a whole. Recoveries and upgrades was 5,561 crores. And write-off was 3,247 crores.
And EEB, the same numbers on EEB?
For the full year, it is 8,134 crores. The gross slippages, the recoveries and upgrades was 4,487, and the write-off was 3,244 crores.
Perfect. This is helpful, Sunil. And last thing, it was asked, but let's say that fourth quarter was great. You do have momentum on collections now. If credit costs undershoot the next 12 months in terms of the 2.2 number that you guide, would it be fair to say that a lot of it could be used to like just build up the buffer?
Yes.
Got it. Perfect. This is useful, Sunil. Thanks.
Thank you.
Thank you.
Thank you. The next question is from the line of Kashyap Javeri from MK Investment Managers. Please go ahead. Mr. Javeri, there's a lot of background disturbance from your line. May I request you to move to a quieter area and ask your question?
Hello. Hello.
Sir, there's a lot of background disturbance from your line.
Yeah, I'm actually traveling right now. Just one question from my side and a data point. In the recovery that you had during this quarter, what was the interest income that was recognized on those recoveries during the quarter? That's the only question I have.
Mr. Zaveri, I'm sorry, I don't have that number handy. I will have to come back. You can take from us offline.
Sure, thank you.
Thank you.
Thank you. The next question. Before we take the next question, we would like to remind our participants, you may press star and 1 to ask a question. The next question is from the line of Param Subramanian from Macquarie. Please go ahead.
Hi, team. Thank you for the opportunity. So I wanted to ask on the restructuring book, what proportion is still under moratorium? Because you mentioned some amount would start coming out of moratorium from in fourth quarter and first quarter. And what is the accrued interest on the restructured book for the EEB vertical? Yeah.
So, 50% of the, roughly plus or minus 1 or 2% it can be, but roughly 50% of my restructured book will come out of has come out of moratorium starting 1st of April, and the rest will start from 1st of July.
Got it. That's helpful. And what's the accrued interest on the restructured book?
Accrued interest on the restructured book should be around 800 odd crores.
Got it. Thanks, Sunil. One more question, basically on the new MFI norms. I wanted to ask, a number of the MFI entities are talking about slowing down disbursements in the first half until, the credit bureaus, etc., align to the new norms, basically on calculating household income. So firstly, how are we placed on these new norms if we are looking at it? Of course, applicability is a different thing for us, but are we looking to slow down disbursements, and what proportion of our book would be in line with this, 50% EMI to household income cap? Yeah, that was my question. Thank you.
There is two factors in here. One factor, always after the March, April disbursement has come down. This is normal nature. First 15 days there is no disbursement has come. This is a normal nature. second part on that, I mentioned earlier, we are really practicing this household income guru check in our graduation loan 2 years before, and it is practicing. So in that sense, we have not much more time to transform to the new system. This is going on to us. And we are not wait for 1 month.
So essentially what we are saying is when we started this individual loan product, we were looking at family income, we were looking at family credit bureau. So there is a process which is already running for a individual loan process. Of course, that book is smaller the size than a group loan. So to that extent, the volume will be much bigger. It took us two weeks to start that process on the ground, and since then we've been doing it.
Got it. That's helpful. Thanks, Sunil, and congratulations on a good quarter. Thank you.
Thank you.
Thank you. The next question is from the line of Abhishek Murarka from HSBC. Please go ahead.
Yeah, good evening, sir. So my question is again on these new norms. Now, you said that you are, already practicing this over the past 2 years. But what I understand is some part of it is also dependent on external agencies like credit bureaus being able to give you the information. And some of the participants have called out that the bureau itself is not ready with that kind of information about specifics about the consumer and the household. So how are you bypassing that and you're able to get that information or have that information without the help of the bureau?
So you're right, how you read it is important. So there is no one report for the consolidated family record, both on the micro and on this side. So what we do and our arrangement with the credit bureau is they give us a separate report on the for the husband and then for the wife, but within that they give us both the micro as well as the consumer. So we take 2 reports instead of 1, and accordingly we proceed. And that is what we've been doing it for our individual loans.
Okay. And what kind of observation do you have on the FOIR? Is there enough headroom to give large ticket loans, or do you have to increase the duration of the product to accommodate it? What has been the experience? Because you seem to be ahead of the curve in practicing this.
FOIR, we are also practicing in our individual loan 50%.
So all the customers, they have enough headroom in terms of that 50%?
No, that cannot be like to comment now. It's the need on that. Another quarter will be passed and then we can see that.
So let me give you a data point. We used to be 50-50% 2-year loan. That ratio is now 40 to 60%, 40-60. Right, if that helps.
Okay. 40-60, sorry, what was that?
So 40 is 1 year, 60 is 2 years. Earlier it used to be 50-50.
Okay. And are you also planning to introduce longer tenure loans, maybe 3 years or longer, just to reduce the EMI?
See, that we will have to see, once we have, it is just there, right? It's only a month. We will have to see whether we are able to fulfill the customer requirements or not. And then we will have to take that call, whether we are comfortable or is comfortable. And then we will have to take that call.
Okay. Thank you so much. Thanks for the answer.
Thank you.
Thank you.
Thank you. The next question is from the line of Rahul Picha from Multi-Act Equity. Please go ahead.
Yeah, thanks for the opportunity. My first question is on Assam collection efficiency. So when I look at the collection efficiency in Assam for the month of December, it was 96%. And for the month of March, it was 98%. While for Q4 average, it was 93%. So why is there a dip in the average number? I just wanted to understand that.
Yes, so it is not a dip, right? If you see, the average has improved by 2%, So yes, you are right. So if you assume that December was the base and then it has to improve, then yes, you will find it as a dip. But if you see on a month-on-month basis, there has been an improvement.
Yeah, for the quarter there is an improvement, but I was just thinking that from December onwards, our collection efficiency trends should have been on the upside. So in Assam, was Jan or Feb a bit challenging, or any qualitative insights on that?
No, not really. You will always see the last quarter of the month will have the higher collection efficiency. So that has been the trend.
Okay. Okay, but the average for the quarter being 93, it kind of also implies that probably Jan Feb would have been even under 90, right?
No, there are two things here, right? One is the recoveries from NPA. So as the quarter progresses, the recoveries improve, right? Second is the write-offs that we take. That also gets impacted only the March number and not the full quarter number.
Okay. But these collection efficiencies don't include the recoveries from the NPA pool, right? The geographic collection efficiencies that you have given. Or is it including NPA?
No, this geographic is excluding NPA.
Yeah, okay. So that would have been, I think, primarily impacted because of the write-offs.
Yes.
Okay. And so second question is on the restructured book, like a part of the restructured book would be out of moratorium starting 1st April. So how have the collection trends been in that book, if you can qualitatively give some color on that?
So we don't want to give a forward-looking number, but we've given the collection status on our restructured book as on 31st March. Right? So it can't be very different there.
Okay. But as at 31st March, it was still not out of moratorium, right? So
correct. So that's what I'm saying. It can only improve. It can't deteriorate.
Okay. And sir, my last question is on the steady state credit costs. I think a little while back in the call, you said that you expect 2.5% kind of steady state credit cost going forward. So was that on the total book or only for microfinance?
So that's on the total book.
Okay. Okay. Fine. Thank you.
Thank you.
Thank you.
Thank you. The next question is from the line of Karthik Chellappa from Vina Vista Fund Management. Please go ahead.
Yeah, thank you for the opportunity again, sir. I just have two questions. The first one is for the housing book. Can you share what is the average ticket size?
8,15,000
on outstanding.
On outstanding.
Oh, no, on disbursement.
Suresh, do you have that number, Suresh?
Yeah, it is close. Yeah, good afternoon. The incremental disbursement is in the range of 13.5 lakh is the average ticket size.
13.5. Okay.
For the year.
Yeah. And for the individual micro loans, what is the average ticket size and yield?
Average ticket size 1,15,000 in disbursement basis. And are you like to say that the
yield is the same as group loan, 19.5.
Okay, so if the NPA on the individual book is only 1 to 1.5%, and if I assume credit losses also in a similar range, with a higher ticket size, from a pure micro book perspective, this should be ROA accretive, right? As the mix shift towards individual loans.
Yes.
So in fact, sizably ROA accretive, right?
No. See, we don't expect micro group loans to have a similar credit cost like what we had last financial year, right? So we expect credit cost there also to improve. But clearly, it's a more
even
ROE.
if you assume the credit cost to be about 225, 250 basis points for the group loans, and this is only 100 basis points lower, with a lower cost income ratio and a higher ticket size, the ROA should actually be materially higher, right?
Yes, it will be higher. I don't want to put a adjective to it, but yes, it is higher.
Okay. This is enough. Thank you very much, Sunil. Wish you all the very best.
Thank you.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question for today. I now hand the conference over to Mr. Sunil Samdani, CFO, for closing comments.
Thank you, ladies and gentlemen, for your time and patience. Thank you very much.
Thank
you. On behalf of Bandhan Bank Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.